Hi, it's Elizabeth Elliott. Welcome back to my channel. Today we have Jamie Holmes with Movement Mortgage.
Hello, everybody.
And I brought him on to talk about all things mortgages when you're buying a resale property. Can you use a direct lender when you're buying new construction? Yes, you absolutely can. It's a little bit more difficult because you're not going to get those builder incentives, but it's still somebody that you should have in your back pocket for any questions that you have. I like to use Jamie for my own personal investment property questions. So I wanted to bring him on because I like to play buyer and ask him the tough questions and give you guys the answers.
Which I appreciate all the time.
So let's talk about being a buyer in today's market.
I think the entire country has the same question. They want to know what is happening with the interest rates. What are they going to be? When are they going to come down? Is it now the right time to buy? What can we do to try to eliminate this pain to bring down the payment? Right. And so I think probably the biggest thing that's being sold by lenders right now is trying to do like temporary buy down programs, because we've got to, again, hit that major pain point, which is how can you help save me with my monthly payment?
Right.
So what lenders have done is they've released different temporary buy down programs. There's a 2-1, a 3-2-1, and of course a 1-1-0 buy down.
Okay.
And people ask, what does that mean?
Yeah, talk to me like I'm really dumb second
Yes.
grader.
So the most popular one is like a 2-1 buy down.
Okay,
And
I know what that is,
essentially,
but what is that?
what that means is if you're a buyer, let's say right now the current rate is 8%. Maybe it'll stay there. So if the
Maybe
current
it'll-
rate today, right now, is 8%, the first year of your mortgage, the rate would be 6%.
Right.
The second year it goes to 7%, and in years 3 through 30,
It's
it would go
eight.
to the 8%.
And your hope is that you refinance in a couple of
Correct.
years.
The goal of the program is that you're going to be refinancing in the first 2 years. So right now, you're taking advantage of the lower payment.
Yeah.
And then let's say next year, hopefully the rates drop in the second quarter as is predicted. Then we can refinance you into a new 30-year mortgage at a lower rate.
What's a refinance cost me?
What will a refinance cost you? I would say a refinance costs a consumer, I would say on average, $5,000 to $7,000.
Okay.
It's a pretty safe number to use, and that includes your prepaids, like putting a new escrow account together for your taxes and insurance.
What's a 2-1 buy down cost me?
So the 2-1 buy down, let's say the example we'll use is the loan amount is $500,000.
Okay.
Right? The cost to do the program will be around $11,500.
Okay.
So essentially, it's really gonna be up to around like 2.3% of the loan amount is the cost for the 2-1 buy down.
Mhm.
But the caveat is that the seller or buyer can pay for it. So if I'm going to buy a house, and in this market where now is a great time to buy because you can get seller concessions.
100%.
This isn't like what it was 2 years ago. The seller's like, pound sand, you're gonna come in over asking price, waive all contingencies, come
I
get it
tell
if you
buyers
can.
all the time, now is the best time to buy for getting something on your terms.
Correct, so it's time to do a little negotiating. How can you help me? So the seller will agree to pay for it. So imagine it, you're gonna save over $600 a month in the first year if the loan amount is $500,000, which isn't even that money. It's a lot of money to all of us. And that cost gets put into a separate escrow account.
Okay.
So let's say next year, the rates drop and it's like, it's go time. It's time to get a new low interest rate, refinance, 30-year fixed. The rest of the funds that are in that account get used as a principal reduction on the new loan that you're being refinanced into. So that is the best deal because the seller is paying for your costs. You're gonna use that money to get a lower payment and then use that money to lower the principal on your new loan that you're gonna be refinanced into.
Right. So what do you do when a buyer's like, what if the rates go up and they don't continue to come back down?
So if the rates go up, then good thing you bought right now anyways. Because at the worst case scenario, the rate will be 8%.
Right.
So listen, if all hell breaks loose and we're at double digits, you're still in a safe place. You're gonna have a lower payment for 2 years, and then years 3 through 30, you're still beating the current market.
We are here in Neptune Beach at the local, one of my favorite spots. It's actually where I met my lender partner, Jamie. I'm having, I think this is called like a pink berry or a pink dream, something like that. It's the only cocktail with the word pink in it. It's basically vodka with coconut cream and lemon and blueberry in it. So 100% my favorite. If I'm not getting one of these, I'm getting a glass of Prosecco wherever. So come to the local. The food is great. The cocktails are great. They've got live music sometimes, and it's a short walk to the beach. Jamie is a professional house hacker because he's got like, I don't know, how many Airbnbs do you have now?
6 Airbnbs.
6 Airbnbs. If I want to buy an Airbnb, I'm calling Jamie because he's done it so many times and he knows. He just knows. What we've talked about so many times is if you're going to be a first-time home buyer,
Yes.
what is house hacking and what can we do? And things have changed now just recently about house hacking. So talk about that.
You know, the old, now the still current rule is people were like, if you're a first-time home buyer, I would have always said, I'm going to look to use FHA financing to buy a duplex or a triplex with 3.5% down.
Okay.
Reason being is you're going to live in one, you rent out the other ones, you live in there for a year, and then you can move on and buy another primary residence.
1 year or 2 years?
Just 1 year. So imagine that, like you're a first-time home buyer. After 1 year, you can have 2 to 3 rental properties underneath your name.
Crazy.
Game changer.
Yeah.
I wish I would have known that.
Yeah.
I really,
Same.
I tell every family member, all my friends, my cousins that are in college, I'm like, do I have a game plan for you? We're gonna
I have
get those
buyers
multiple-
calling me wanting to do this, so that the knowledge is out there now. It wasn't out there 10 years ago.
So now what was just announced literally about 2 weeks ago is that starting on November 17th, Fannie Mae says it's time for us to get a piece of this pie. So old rule used to be if you're buying a duplex using conventional financing, you had to put down 15%.
Okay.
If you're trying to buy a triplex or a quadplex, you had to put down 25%. Now Fannie Mae's like, forget it. As long as it's gonna be your primary residence, they're gonna allow you to put down 5%. So you can literally go and get a quadplex, which I believe the loan limit in our county is around 1.3 million for 5% down.
That's crazy.
So you buy a triplex or a quadplex, live in it for 1 year, then you can do it again. So that literally means that in 2 years, you could have 8 rental units. That is insane for 5% down.
Okay.
So it goes into effect November 17th. Yeah, I think that it is a very big deal because the loan limits are higher than FHA. So that's a big difference.
The confusion I have is 3.5%. I always bought 3.5% down for a duplex, but now you're saying 5% down. Is that for like anything over 2 units?
It's just for, there's 2 separate types of loans.
Okay.
FHA is 3.5% down, has
Okay.
mortgage insurance attached to it for the life of the loan.
Right.
Conventional, up to 4 units is now only 5% down.
You're talking conventional. has
Conventional. Fannie Mae said, how are we going to compete
changed with
and get some
FHA.
more business? What can we do?
Are the rates higher?
Not necessarily. Because again, you're buying as a primary residence,
Right.
which back in the day, meaning a month ago, you cannot buy it as a primary residence, so you're getting a much higher interest rate. Usually an investment property is going to be at least 1 full percent higher than a primary residence. So now again, what a great deal. Lower interest rates, more units available in one fell
Yeah.
swoop.
So you're talking like a million. What did you say? $1,030,000.
Like around 1.3 million
One
for a
100.
quadplex.
Yeah, 1,300,000. So all you need is what, 50 something thousand down, and get your sellers to cover your closing costs. And now you're in what, 4 units?
It's possible.
Damn. And say 50,000
Especially in what I mean, like certain pockets, like the beach in San Marco.
Yeah.
All of a sudden now you're just attaining for not that much money 4 units at once.
So let's talk about pre-approval, because I know of a duplex. I know of 2
Ooh.
duplexes right now on the market that are great, and one's around 600,000. One's going to be over $1 million, but also all walking distance to the beach. And I know so many buyers are like, I'm going to buy that duplex, but I'm not going to do a pre-approval until I find the one. And that is like the thing that happens to me every single day as a realtor. They don't want to do a pre-approval because they want to wait for the one.
Yes, I'm always concerned when I hear that initial conversation, because I always kind of put it like, you want to get emotionally, let's say you're out there with your significant other and they think that this is the house that I want. They start to get emotionally attached to it. You both get excited and you say like, okay, now let's see if we can afford it.
Right.
I get a phone call. I'm pulling credit, asking
Yep.
some initial questions. Unfortunately, you don't have the credit scores to qualify. Had we have done this 3 months ago, I could have put a game plan together to get your
Yep.
scores up, and now everyone's upset.
Or
As am I.
Or they do qualify and they don't like the payment amount.
Yes.
This happened recently with a buyer of mine.
We talk about that normally in initial conversations that I have is like, what is the payment that you're in search of? Like my job is to put you financially in the best scenario that I can. And sometimes they say like, I want my payment to be X.
Yeah.
And then when I start backing into the numbers, sometimes it's not what they want.
Their payment to be what their rent is. Because a lot of times they're renting right now and they want it to be, they want to get into a house for what they're renting for. And so they show up to my listing or they want to go see a house that's whatever. I'll give you an example, $640,000. And then I send them, I go, okay, have you done a pre-approval? Let's talk about our left and right limits. What's the lowest and highest, like about what you can go. I send them to a lender who's going to fact check everything and see like, okay, here's where you qualify. Okay, well, when you qualify at $550, which wouldn't even get them the house they wanted, now they don't even like the payment at $550. They want something below $500. So you really, really need to get a pre-approval.
It's that caviar taste and ramen noodle budget. You gotta figure. You gotta find somewhere in the middle.
Yep.
And that's difficult. That's a hard conversation to have, but it's all the more reason to do that up front.
Really early.
So we're kind of the same page. Maybe we can get a co-signer.
So what is the thing that holds people back from pre-approval?
Oh, pulling the credit.
But you know what that is? It's a 3%, 3 points, 3 to 5 points knock on your credit score.
Very big misconception with credit scores because what consumers can get for free, Credit Karma, all that kind of stuff, those are generally inflated scores and are not the same as when I pull your credit. So a conversation I have all the time is when they're like, Jamie, I really think that you just brought down my credit score by like 25 points. And I was like, but what exactly were you comparing it to?
Where are we finding credit scores nowadays? Like if I'm a consumer, I'm getting it from my bank, Experian.
Yeah, FICO.com.
Yeah.
I wish that there's like once a year, everyone just got one mortgage credit pool where it shows all three credit.
12 different.
Yeah, there's 8 different algorithms used in our magical, the matrix as I call it. Where is it coming from? We don't know. But we get the scores. We know it's the lowest mid credit score that qualifies the interest rate.
Right.
So a lot of times consumers are like, well, can you just do a soft credit pool? No, because I need all 3. Like that's not how it works in the mortgage world.
It's a fear because I've been in this same boat not even very long ago. I'm like, okay, it's a good idea for anybody to just have a pre-approval on hand at all times, like in my opinion.
Well, at least know what's going on.
Properties.
Well, because then also think, I've had it where clients, all of a sudden a medical collection popped up they didn't know was there.
Right.
And they wouldn't have known that unless they got pre-approved beforehand. Because if it pops up after you find a property, then again, your scores might drop, which is going to affect your interest rate and maybe a loan type that you qualify for.
Right. So many people are like, oh, I found the house. This is the one. And then they go to a pre-approval and they do qualify and the payment's too high, or they don't qualify because of something that they didn't know existed.
Correct. That's why
I
really think you need to be at least 3 months out when you're getting pre-approved to give it time. If I have to like get it through a rapid rescore, things we can do to get your credit scores up, or have a game plan. Like, where's your down payment coming from? And don't tell me it's not.
And closing costs.
Don't tell me it's that box of cash you've been hiding in your couch because you don't trust banks.
Oh man.
And it happens.
That happened
all
to me
the time.
In the last 6 months. I've had, oh gosh, once you've worked in real estate a while, you see all the things. But I had a guy who wanted to buy this house and he's like, but all my money is in cash, like under my bed.
Yeah.
And I go, whoa, like don't go just depositing all your cash. It looks really weird to banks to just have a huge deposit.
We don't like it. We don't want to see large cash deposits. In our eyes, in the lending world, it's like it doesn't exist. We can't count it. It's got to have 2 clean bank statements of no large deposits. Right. So I tell people, again, we're 3 months out. You got that box of cash. You don't trust banks? I don't either. Put it into your banking system, say a quick prayer, and just let it sit there for a few months.
Let's talk about the top 3 things you should not do right before you're about to buy a house.
Right before you're about to buy a house? Take on any other large debt. Not be employed where you quit your job. Have no idea where the funds are going to come from for the down payment and closing costs.
There's 3 right there. Don't quit your job. Don't go buy a car, and don't have not have your savings.
Have a game plan and general question. What are the closing costs? And closing costs are on average around 3% of the purchase price. It's a safe number to use. That's what I tell most clients. So. A lot of times they forget about that.
Yeah.
Especially maybe someone like yourself that's a VA buyer.
Yeah.
when they think like, hey, this is,
I can do zero down.
there's
just
no
get into a
down.
house.
Yeah, so like, why am I bringing anything to the closing table? It's a great question.
Yep.
But you're gonna have to
like,
bring something.
The thing is, in high school, we don't have a class on buying a house, as
No.
we should have a class on how to buy property.
Buy a house, talk about your credit, because I have people all the time like, I can't believe they kept track of that. It's like, this is your entire credit history. So when you go to college and they're like, do you want to open up all these credit cards? And you're like, absolutely, let's do it. Do I have to pay for it? I don't know. Who cares? Keep this party keep this party rolling. And then all of a sudden, like, oh yeah, I had those lates. I had this. I'm like, yeah, like, it's very important. There should definitely be a class in high school about credit.
Let's talk about credit scores. Let's say you put my credit.
Oh yeah.
And my credit's like, I don't want to give a, like, I'm just gonna guess in the 500s.
There's a hypothetical.
No, mine's I've got great credit. Let's say it's in the 500s. It's like not great. And I want to start working on my credit to get it up in the 6s, 7s.
Yes.
How long is it going to take me on average to get it
3 to 6 months.
3 to 6 months to get it up 100
Because
points?
a lot of times you're going to need to open up more positive trade lines. It's going to be reporting to the credit bureaus. They'll be like, how do I do that? Usually I would tell a client, open up 1 to 2 secured credit cards with your current bank. Again, you're putting the money up front, just like a debit card, but it'll start then reporting to the credit bureaus.
Okay.
You can get added as an authorized user to someone in your family that's had an established credit history.
Yes. Guys, pause. How do rich people make their children rich? They add their kids on as authorized users, like in college.
Yeah, so
high
usually,
school.
18, authorized user. My own mother did this for me.
Pay your credit card off. As a parent, pay your credit card off, and now you're building your kid's credit score.
Correct.
I got married, and they pulled my credit so that I could join accounts with my husband. My credit score was like over 800, and the guy was like, I've never seen such high credit score for someone with such a short credit history, and it's because my mom and dad helped me get set up for success.
It's the little things.
Man,
and sometimes you do that too, I call it a love test. Do your parents love you? We're gonna find out. Like, will they add you an authorized user on their credit card?
No.
You'll never even see it. They don't even have to give it to you. Just add it to you so you're getting the benefits of reporting on your credit.
Let's talk about gifts, funds, gift funds, because a lot of people have the money for a down payment, but maybe they don't have the money for a closing cost.
Sure.
So what's the maximum amount that somebody can give me to buy a house?
They can give you...
Because there's so many people moving back in with their parents to save for homes.
Yeah, so you can get the entire amount for your down payment and closing costs if needed, gifted to you by your family or friend. So again, the real love test. Are you gonna help me get into this house? Maybe that's the love test they want to get you out of their house. So help me get into the new one as soon as possible. How do we make this happen? The father's like, liquidate my 401k. we gotta get these kids out of here. But it is, so again, like, that's a big question. People are asking, like, how much of a gift can I get? Like, listen, they can give you the entire amount if needed.
Right.
For all loan types.
What about taxes when it comes to gifts?
I'm gonna refer that to talk to their CPA about that, because you get that a lot with, I will say, somewhat older parents. They're concerned about hitting up the gift tax. Yeah. And normally, I guess it depends on what accounts they're pulling it through, but how they're reporting that to the IRS. Because I know that I would never tell the IRS that I gave my family member, whatever, over $12,000 as a gift. So, but again, I always say you got to talk to your CPA, see what accounts you're pulling out of, know what tax you're going to pay on it.
Now, I did this. I had a great amount of money saved for my first house, and I could afford my first house without any help. My parents wanted to be nice. They're like, for Christmas, let me contribute. What kind of like documentation do I need for you to show that my parents gave me a gift?
So if it's during the loan process, meaning that if I have 2 months of your most recent bank statements and I see a large deposit and I ask you, what is that? And you say that was a gift from my mother for whatever reason, we're going to consider it a gift.
She loves me.
Because she loves you. We're going to consider it a gift. And it's pretty easy. Like, you're going to fill out a gift form. They're going to put their name on it. You'll put your name on it. We'll get a copy of that check or wire from that, verifying where the funds came from. In worst case, you'd have to receive their bank statement showing those funds leaving their account. So it kind of all adds up. We see it entering your account. We see the gift letter that shows the account number, and then we see their statement showing the funds leaving that account. Don't black anything out.
Right.
That's the other big thing they like to do. They're like, well, I mean, you don't need to see all the pages. Like, well, unfortunately, we always do, like, all pages of statement, nothing blacked out, or the underwriter will ask you to do it all over again, and nobody wants to do that.
Right. when you're buying a house and you're choosing which realtor you want to use and which lender you want to use, just remember, like, there's guidelines that you have to abide by in order to help them get into that home. And so once you've like put that offer in, you have your pre-approval, your offer gets accepted, now you're in underwriting, and the underwriters are going to start asking you for stuff.
And I say the underwriters, I mean, it's almost like, it's like going back to your childhood. And the underwriters are like your parents when they say, because I said so. Because that's like, well, why do you need this? Why do you see all pages of my bank statement? Why do you need this? And I was like, in the end, it's really just because she said so. Because the underwriter needs this to meet the Fannie, FHA, VA guidelines so we can get this loan to closing as quickly as possible.
Right. And this is all to protect you, by the way, because 2007.
Listen, I entered this market in 2011. For all those loan officers before me, shame on them. Because there were no guys, the Wild Wild West. Stated income, appraisal being a funding condition.
Did you have a heartbeat?
Yeah. Can you fog a mirror? Let's get you to a house. Can you afford it? We're going to find out later. Let's get this party going. It's ridiculous. So now everyone complained about that, like should have been more guidelines, should have been more restrictions. Well, here we are. So the government's more involved to help protect consumers, not get put into bad loans, no more predatory lendings happening. And it's a good thing.
We're not in the same situation. The inventory is super low. Back then, the inventory was super high. People were foreclosing all over the place. We have a historically low inventory right now.
Correct.
Rates are higher than they probably were at that time. I don't remember. But like basically you had to have a heartbeat and you could get into a home and then you're foreclosing a couple of years later because of bad lending practices. This is not the same situation that we're in right now, which is,
thank God,
historically low inventory and higher rates.
Correct. And the weird thought process when people ask, like, is now the right time to buy? Like we're saying earlier, like, yes, I want to have negotiating power to get some of my closing costs paid for. What I would not want to be if I'm a buyer, I don't want to say, let's say the rates drop to 5.875. It's going to turn into it was 2 years ago. You're going to have all the buyers jump off the fence at the same time. Now you're in multiple offers. And I had the same clients complain to me like, I just had to go 30 grand over the asking price. No concessions given to me. I'm like, because now you're competing with everybody else. I want to compete with just myself and get as much things paid for me by the seller as possible, which is why I would look to buy right now.
I ran a scenario the other day on a house that was like $650,000, and the amount that you would have paid at the 8% rate versus the 5% rate over the next 2 years was something like $36,000. So let's say you waited 2 years for the rates to come down to 5%. And now instead of paying that $36,000 in interest that you would have paid over 2 years, now you're competing with other buyers and paying $30,000, $40,000, $50,000 over asking price to get the same exact house that you could have just gained $130,000 in equity in over that 2 year period.
Right. I mean,
it's
real estate that continues to appreciate every year. They got a rate between 5 and 7% year after year. People just gotta understand, like, sometimes the math, it does actually make sense, and you don't want to wait and then pay more for the same house. Just, you're losing on the equity. It's not in the best interest of yourself.
In certain markets, cash investors are winning out on a lot of properties right now. Jacksonville is one of those. But I will say that cash is not necessarily king in every single situation. And I will give you one example. I had a listing recently. I had 3 offers come in on one weekend. One was a cash offer over $1.6 million. Like, cash offer, you're gonna have that money in your account like in a week, maybe 2. And then we had another offer come in a little bit below asking and another one come in over asking price. Guess which one my sellers took?
Maybe the highest amount possible.
Correct. They're gonna go with the amount of money, like the most amount of money, because sellers don't necessarily need to sell their homes. So if you're a buyer out there that's like, I don't want to get into the market right now, there's too many investors in my area that are buying up everything. Just because they're an investor doesn't mean they're coming in at full list. It doesn't mean they're coming in over list. They're coming in kind of low ball and hoping they can scoop up property. If you come in closer to list price with a strong pre-approval from a lender that people know and trust, you're more likely to win out on that property, period.
Make that cash the backup.
Yeah, facts. Thank you guys so much for coming on and watching this interview with Jamie. I appreciate you guys all for watching. Always like, share, subscribe, do all the things. We'll see you on the next one, and make sure you tip your bartenders and your servers. Come visit the local here in Neptune Beach, one of my favorites, and we'll see you on the next one. Thank you, Jamie.
Thank you for having me on. Had a great time.